So today I'm going to talk about the innate ranking system that we've developed to rank funds past performance. So I need to be clear that this isn't, about judging the future performance of a fund. It says nothing about that. You're looking at past performance, and on various metrics, up to 30 metrics that we'll go through, you actually making an assessment of how well the fund performed by ranking it against all the other funds in the same category across these 30 metrics. So let's go again back into the Standard Multi-Manager Balance Fund, which is in the CISA High Equity category. So there we go. And here's the innate ranking over a 60-month period. Now you can actually play with this period. You can change it in the settings. You can have a look at over 3 years. When you change that, you'll see it down here. Let me just find it. There we go. Under here, INN8 Invest ranking period, 3, 5, or 10 years. So if you click on 3 years, within a couple of seconds, it will recalculate all of those rankings. And when you go back, they'll be updated. I'm going to leave it at 5 years and just go back to the ranking here. So you'll see the little disclosure indicator there. And if you click through, it's going to give you those 30 metrics as well as the overall ranking. So here it confirms that you're looking at this over a 60-month period. So over the past 5 years to January 2023 in this case. The overall rank of the fund on this basis is 12 out of 164 funds. Now, 164 being less than the 213 funds, because only 164 funds have 5 years. If you had changed it to 3 years, you'd have more funds. Over 10 years, you'd have less funds. And here's the overall rank. And now we can have a look at the metrics. So return metrics, I've got 5. Maximum monthly return. So over that 5-year period, over the last 60 months, what was the highest single month return, which is 11.42. What was the alpha? And this is versus the category average. So in this case, you don't get to choose a benchmark. I'm ranking these funds within their categories. So if the fund doesn't really belong in that category in terms of what it's trying to achieve, its benchmark might be very different. This might not be a good indicator, but we are just rewarding, funds within categories. This is the equivalent of any other sort of awards mechanism that exists. It's rating the funds on the basis of comparing them against each other. The maximum active monthly return, so different to the alpha, which is for the full 5-year period. How much did the fund underperform or outperform, in this case, the CISA category average? This is over a single month. So just like the nominal return over a single month, what was the best month? What was the best month in terms of an active return? The batting average is really the hit rate on a monthly basis. We don't do rolling hit rates or consistencies. Those don't make sense. But over a single month, over the 5-year period, 58% of the time, the fund outperformed the benchmark over that single month, over the CISA category average. And then the upside capture, which we've covered on a previous video as well, it's every time the benchmark, in this case the CISA category average, is up for the month, you keep track of that number as well as what the fund did for the month. The fund could have been down for the month. It doesn't matter. It's whether the benchmark was up or down for the month. You're going to take all the up months for the benchmark and the returns for the fund in that same month and accumulate both. So calculate a cumulative return and divide the fund by the benchmark to see how much of the upside it captured, in this case 115%. We'll see the downside capture a little bit later. So those are the return metrics that I've chosen for this methodology. We'll then look at a bunch of risk metrics. So what would be good risk metrics? So an example would be the minimum monthly return. So in a single month, this fund did minus 11.8%. What about the volatility of the fund? Again, higher volatility represents higher risk. So high negative number, a high volatility, those are bad things. So those will give you a bad score. A good rank would be a low number here and a low number here. Downside deviation, similar thing. So downside deviation measures the deviation below the category average. Maximum drawdown, which is the maximum underperformance from peak to trough of the fund on an absolute basis. The pain index, which measures the area of that underperformance. In other words, not only how badly did it underperform, but how long did it take to recover. So there's a time dimension to this to calculate the pain index. The minimum active monthly return. So again, against that category average, what was the worst single month of underperformance? The tracking risk, which is similar to the volatility, but it's the standard deviation of the active returns instead of the nominal returns. The relative downside deviation. So in this case, we're saying instead of the maximum drawdown, instead of the downside deviation, in other words, the funds, the downside deviation here is underperformance relative to 0%, in other words, capital loss, whereas relative downside deviation is relative to the ASISA category average. And the relative maximum drawdown similarly looks against the benchmark, what was the worst performance peak to trough, but relative to the benchmark. So you're always looking at the worst underperformance of the benchmark. So in this case, only 2.3%, and then obviously went on to recover from that. The relative pain index, again, measuring not only the relative underperformance, but the duration of that underperformance. So taking time into account to calculate the pain index. And then a downside capture, similar to the upside capture, you look for every time that the benchmark was down, what did the fund do? And you again calculate the cumulative return for the benchmark and the fund, and you express that as a ratio. And those two, the upside capture and the downside capture, will come together later in the capture ratio. So a number of risk metrics there, and finally we'll combine return metrics with risk metrics to calculate risk-adjusted return metrics. So here we go, there's about 14, I think, of those. So the probability of skill. Now this is an interesting one because it's really a t-statistic test on the null hypothesis that alpha is less than 0. In other words, can you reject that null hypothesis that this fund appears to have no skill? Historically, over the last 5 years, is there evidence of skill? And in this case, you'd reject the null hypothesis because, there is this evidence of skill. So the probability of skill is 93%. The Sharpe ratio would be the excess return over the risk-free rate divided by the volatility. The M squared, or the Mogliani and Mogliani ratio, the risk-adjusted performance ratio, the Sortino ratio, which uses downside deviation, the Kalmar ratio, which uses the maximum drawdown, the pain ratio, which uses the pain index, and the Omega ratio, which measures the sort of upside returns over some target. In this case, I'm using 0 versus the downside. The information ratio, which is now we're looking at the alpha versus, in this case, the tracking risk. The Trainor measures the alpha against the beta. The appraisal ratio, the relative Sortino ratio, relative downside deviation, relative Kalmar ratio, relative maximum drawdown, the relative pain ratio against the relative pain index, and the capture ratio, which would be the upside capture versus the downside capture. So you want numbers above 1 here to signify that the manager's capturing more, or the fund is capturing more of the upside than it is of the downside. Now, for each of these, you can go into more detail just by clicking through and see where it stacks up versus all the other funds. Okay, so in this case, if we looked at it, on the Sharpe ratio, for example, it was 25 out of 164. But you can see the best fund all the way down to, there's the fund, all the way down to the worst fund. And if you wanted to see those graphically, you just click on that graph and you see exactly the same thing. So you can do this for any of these ratios. okay, including this diamond ranking. So that's the innate ranking system, rewarding past performance, who's done best, who's done worst over the past, saying nothing about the future. I'll leave it there. Thanks, bye.